Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock, with news the extent of China's economic stumble amid its latest pandemic crisis is becoming evident. But first, the level of new American jobless claims continues to fall, sinking to a new modern low with 193,000 new claimants last week, and there are now 1.65 million people on these benefits, the lowest since 1968. And there was clear evidence of boom conditions in the US economy this morning. The Fed's data on consumer credit jumped far more than expected in March. It grew by $42 billion in the month, the most ever, and reaching $4.45 trillion. Two-thirds of the rise was for revolving credit, such as credit cards. And later today, Canada will release its budget for 2022-23, and it is widely expected to contain a plan to ban foreigners from buying houses, amongst other housing measures. This is in direct response to the continued rise of house prices there. Median house prices have risen more than 50% in the past 2 years alone, now topping $1 million New Zealand dollars as a countrywide average. Toronto is the flashpoint, but Vancouver is also in the stratosphere. And China's foreign currency reserves fell almost 1% in March from February. It was the third monthly fall in a row and comes both from an outflow of foreign investment and the strengthening of the US currency. The decline has been a long-term trend. They now stand at $3.18 trillion, about 21.5% of GDP. 5 years ago, they stood at 25.5% of GDP. It is also becoming clear that China's 2022 growth target of about 5.5% is going to undershoot. We're only a quarter of the way through the year, and already analysts think it will be more like 4.5%. But that assumes the stresses ahead don't get worse. The growing pandemic crisis in China is having severe hardship consequences, and not only in the well-publicised ones in Shanghai. Less than a year after President Xi claimed victory over extreme poverty, some provinces are about to fall back into that condition. Oddly, Beijing's common prosperity push is said to have been put on the back burner until their economy recovers, which is telling about the current state of their overall economy. It is clear that no one in China actually knows how to get out of this situation, one forced on them by the combination of their healthcare system unable to cope, a vaccine that isn't very effective against Omicron, and a widespread anti-vax sentiment, especially amongst the older traditional population. The fallout on trade for New Zealand could be significant and over a longish period. The US Treasury 10-year yield opens today at 2.66% and up another 5 basis points from this time yesterday. And the price of gold starts today at $1,935 an ounce, and that's $14 higher than this time yesterday. And oil prices are down again, but only by $1, at just under $95 a barrel in the US and under $100 a barrel for the Brent price. And the Kiwi dollar will open lower than this time yesterday at 69 US cents. Against the Australian dollar, we're firmer at 92.3 Australian cents. Against the euro, we're little changed at 63.4 euro cents. And that's holding recent gains. And that all means our trade weighted index will start today at just under 74.7 and very little changed. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.